trades, Sam here from Trade to Prosper to give you another crypto update, my thoughts on Bitcoin. I suppose I could start with the higher time frame and then we'll talk about this particular chart here. So when we look at Bitcoin and we're looking at Bybit, we have a number of Fibonacci settings, and while we think this blue level is the ultimate goal, however, there's a prerequisite, and if we look at the weekly levels from the past, we're going to explain this band and why it's going to be a strong support. So when we were coming up back in 2021 to this level, this was pretty much, you can say, many months of resistance. So that is a strong resistance. And then when we did break above it, it became support, and then went up. And when we break that, that became a bearish market. When we break that, it became a bearish market. But however, the point is that is a strong level. So it will make sense that since we break this level decisively, the back test should take place and then up again. What we also have, if you follow our methodology, is TPOs, which is volume profiles. So what we've done here in this area, the previous area that hasn't been tapped, we have a volume profile. And if we go to the daily, we'll see that level. So we can see we just did the top part, and we have our weekly there, we have our value high, we have our point of control, and then we have the value low. So when we come across, we've actually tapped this point of control and we found the wick. If we look at the other charts from now on, I'm going to explain it much more, but here's a point, and this is not my idea, this is by the guy of Chart Champions. The champion he is a gun. And one good point he made was every time we've got these higher lows all the way through. And even when you look at that, it's still a higher low from that. So what we've done is, that is the previous low. And he said we can potentially have this as a reversal. Also makes sense that on the daily, there's a daily support. So that gives you a reason why there is that bounce. And we entered a small long. However, we're going to have resistance either on this black line here or further up. And then we'll like to, I doubt it we will have a V shape, but if it does that, then we're going to look for the back test for an entry. Now there is a prerequisite, moving averages. So I want to just talk about this big picture, the level of this, why this is a significant level, and also the fact that when price came down, there's the liquidity started from here. So all that liquidity for the longs all the way through here kept going, and we've taken out most of that longs, all that liquidity, which is in the millions, as we know, liquidations for the longs. And the question is, are they going to look for more? So we know the game of liquidity, especially with the big guys, exchanges and so on, they like to push prices down so they can also profit. This area that went very strong, and we tend to call that the FVG, which is a fair gap area, fair value gap. And in many cases, that can be targeted as well. So that is potentially a target, because there is no, it went very quick. And from this candle, pretty much all the way to this candle. However, to get there, it has to go through this. And I don't think it's going to go through it. I think this weekly level here with the value level low could be, because it's never been tapped, this didn't touch it. So this could be an area where if we go below it, come back up, regain the weekly. If we regain this weekly, it's a good entry for long, knowing that we passed it and then back up again. So that from this type of strategy, we're okay with that. However, if you want to be someone that plays a bit, wants more confirmation, now let's look at the other chart. This has all the moving averages, and I want to really pick up a place that gives you some context. Now, when we were ranging and price broke below these moving average bands, and those moving average bands are pretty much daily 21, EMA, SMA, 200 dailies, and so on. The very typical ones. Here we had a correction, and then we started the new 1, 2, 3 wave, or the Elliott wave count. And what you'll notice from here, and I've pretty much marked it, Once we lose the moving averages, here we will find them all as support. Yeah, they can take out some liquidity, but the closing of it, this is only 4 hour on the daily, it didn't close below it. So as long as the daily doesn't close below it, we are bullish. Here we came down with a 1, 2, 3 move, and then we took out all the liquidity that was around there, and it was pretty much a fake out, and then back up again. Now the confidence is once we break above these moving averages like that, the back test is your entry, and then up. So that was pretty much clear, and you could see the moving averages coming together, and it was ever so like a triangle and breakout. So that is a clear strategy that you should be paying attention to. Moving averages on a significant level. I won't go into the details, but that's, and then you'll see the moving averages again playing their role. So when we look at the top, and when we see price come down, like we said, this is our ABC correction, like that, or the 1, 2, 3, 4, 5 wave. We had price just below this as one of the targets, and we got it with a swing failure pattern, and that's pretty good for an entry. However, if you look at here, as price comes down, you see how the moving averages are respected, and then once we lose those particular moving averages, we'll come down to the 21 dailies. I think these are the ones. So the 21 dailies are really important level, and once we got the bounce as support, you can see these other moving averages acted as resistance, along with the golden ratio, along with this previous resistance band and support. This is a very strong resistance. That was your entry to go short. And that's what's taken place. Now the problem is we've got the 21 moving averages coming across. I actually prepared this. Give me a sec. I actually prepared this before on another video. Well, sorry, for our team in our channel. So those are the levels that I placed importance. This level for a potential long, and also we also have the wave of free. So if we look at this wave free wave, so that's one wave, two wave. We're looking for a free wave, and maybe we'll get that. So we're going to find resistance here. That's my point. And we've got the 0.05 and the golden ratio. Along with these moving averages, it's going to be a strong resistance level. You might want to take a short, small short. And the question is it going to hold? Are we going to do a W formation up? Or are we going to have a slightly lower high and up? And that it might be here that takes place. So when price comes down, we might actually do this instead. We might find it there as support. And then consolidate as a, but you don't know. If we consolidate, might give a chance to break out. What is a clear signal from this perspective? Well, if these moving averages keep coming, like I pointed out, and if these were to come sideways and so on, or come like that, and we break above, our price breaks above it, then we're going to use it as support, and then up. And that can give you a sort of a left head and a right shoulder of some sort. That is a neckline. And then if we get to that level, we're going to be bullish. We've seen something similar to this in the previous bull run. Once we go above these moving averages, that's when you become confirmed to go long. You can play the game like I do, find levels of interest, short trades, small trades, sorry, and you can play that kind of scenario. I'm still interested in this area, the liquidity, for a number of reasons, with Fibonacci as well. This is coming up. As this comes up, I think that's a 50 daily moving average. That's a 10 weekly moving average. So we're expecting this area, like we point out here, the band 57, 58, just below 60K. This is This area is basically that area that we're talking about in that band. There is that scenario that we can actually be much bearish. We can have a deeper correction. Prior to the halving, a lot of them were 20-30%. This is 17% so far. If we were to say a bit more, 20 in the 20% is acceptable, I think. And then we got this level here, 30%, and that is the top of the channel. If we just pick this out, previous channel. Now here's a few examples of the previous high bull market tops. Just looking at the moving averages as I want to claim. Here, this was a major level back then, which was the 1.414 extension. And it pulled back about 30%. Yeah, about 30%. Significant pullback. You can see how the moving averages were using a support and fluctuating. We basically got a bearish pattern of some sort, and this is no different. Bearish pattern of some sort. So we aligned. Then we fall, and we get this W bottom formation. Once we get that, and if you get a move like that to the upside, then you see how we break these moving averages, and then we use them as support, and then we just continue on. So that was a good example to reflect what we're looking for here. So if we get that kind of formation, 1, 2, and another double bottom, and it moves strong and taps that, these moving averages are going to be on a bottom. This is a level of significance. So we'll find a pullback, and then we should expect something like that to take place before we go over up. So that is one scenario that I've been thinking about. However, I'm more comfortable for it to come down more. So this plays out that fib extension of 1, and I do that from that reference to that reference to that reference. We get a fib extension of 1. It's on the monthly level. So this one's also a monthly level. Now I think I can take these daily ones out. We don't need them. And you can see how if I do that fib extension, it's the golden ratio. So it's going to be resistance there. And chances are we come back down. If you can hold, great. But it needs to have volume before we go there. We can observe that with open interest. However, if it falls down, this is my level of interest, just below this level. And you can see this moving average, which is the 50 daily moving average. Let's double check. Yeah, 50 daily. So that is one I'm really interested in, to start putting some weight into that entry. and if you see, like we said in the past, if you break those moving averages just below, but you regain them, it seems to hold. Similarly again, if you gain, drop, and you regain, it holds. Here we obviously were at the top of the bull market, and even though it was holding on, once we lost it significantly, like we couldn't hold it there, that was the signal. At this point, we dropped the moving averages. We're going to have an attempt, but you want to be bullish. You want to have to break above it and then retest it when these moving averages come across. So I have this fib extension 1. If we get a rejection, and I'm looking like that, just a little bit more to go, just below 60k, and just taking out the bottom of this, then it's a good setup. And then we'll find out if it's the case. Otherwise, then we're going to have a deeper correction. So if if we can't hold this level, this is going to be less of a reason to hold. I think we'll come down here to the 52k range. That will be the deeper correction, and then back up again. But I don't see that happening. I actually look at this area first for the reason explained. But we can have a deeper correction, and that deeper correction is significant. Let's see what that could be. That if we measure that, that 30, we're still acceptable. Still acceptable. And that's in the 50k range. So if we look at this one, that means it comes down to here. And that means it takes the fair value gap out. And then we've got to really reassess, because that's significant. And the golden ratio, look, our golden ratio is there. If we do a Fibonacci from that perspective, I just want to see the Fibonacci levels. So our fib with the log settings is there in the gold band, using that. However, we take the, okay, we put the logs on. It's not much difference. If that's not going to be the case, then you can see we might use that, or that. This one's more of a significant level. And then you can see how the weekly level here, and I'm sure there's more to it, then that could be, so I think we're already, that's A, B, C, and then we just do something like that and continue on. Otherwise, this could, if we bounce and we get a rejection, then we get a deeper correction. But I don't see that happening. I think this is going to be strong either way. That's my, I'm leaning towards this style. If we can't hold that, then that will be the next. Moving on to the other charts, let's see. We're getting the indicators. We're getting on the 4-hour, we're getting bullish divergence. On the 4-hour, if you want to get bullish, you want to see it break this level here. And I think that will equate to the moving averages as well. So at the moment, there is a bullish divergence that's taking place, but is it strong enough? Here we've got the crossover, the wave trend. Early days, let's look on the 12-hour, see if there's anything more. No bullish divergence on 12-hour. But you can see previously we went all the way down. I think that was a daily. Give me a sec. No, that's a weekly then, is it? I had to set it up. Give me a sec, guys. Forgot what time frame that was. Oh, it's a 4-hour. Okay. So that was my reference on the 4-hour sometime back. Just using this. That was other sold conditions, and that was the bottom. However, we also have this level as well. So we've done that already. So we might get a reversal. If we break out of this, it might be enough to continue on. However, if it isn't and we get a rejection, this, we're going to see a bullish divergence and then take up. Here, we want to see past this level here with the wave trend on the 4-hour. So if this was to reverse, we want to see break, and that could be a good signal as well. So I'm using that. If we look at it from a macro, we've got, as I said, the moving averages coming down. There's going to be a squeeze here of some sort with the moving averages, and we might just eventually pop out or further down. And you can see this golden ratio from here. Another way of looking at this Fibonacci is from this level to that as a 1.618, and then you have confluence with the golden ratio here, which also equates to that. And we can see how the resistance taking place. Is there any other chart? Now here's another chart that I want to share that sort of fits into it. If we were to clean it up a bit, give me a sec. Here's a big picture, the parabola. And we got our confluence. I don't want to go into too much detail, but just so price comes in, breaks the monthly 21 moving average as we did here, up. This is parabolic. We've got our reference points all along here. And if you know anything about parabolic charts, that is our base 0 of accumulation, base 1, which is that range. Base 2 was already taking place. This could be base 3. And base 3, if it withstands, if it just goes, if it ranges sideways, this parabolic level is going to be our pivot to break to the upside. And that's going to rock it. And then you can see our Fibonacci levels of interest. Okay, so that is a scenario that I think might play out with the parabolic curve and then break to the upside. And this, if this goes vertical, as it's probably likely to do, our 92K, 90K, 92K is probably the target. It's going to perform extra, blow off top, and then come back down hard, and then range, and then potentially people thinking, oh, it's all done and dusted. And it might, high volatility, I'd love to trade this very well. I'm just looking at this parabolic stuff, and then we just continue on potentially for the next one, next wave. So this could be a corrective wave. This could be our wave 3. Wave 3. This could be our wave 4. And then we just go for the wave 5. And it all fits into the elite wave count. So once we break this parabolic curve, we have a new one of some sort. And I've picked up on this ages. We might even have something like that, where we get a new parabolic curve, and then if we break that it becomes our exit. So it can go up to 120, and in some cases 140. We're thinking of those lines so far, but it needs the nature of a parabolic structure. And if you look at TradingView, guys, I have one. I'm going to bring it up and I'm going to show you something. Just noticed that I'm got much more followers now, 3,807. Been adding a few more in the past weeks. What we did here is obviously a number of posts and a bit of focus on Solana. Called this one out right, by the way, just letting you know that it was there. And we called it a rising wedge. And that was our chart there. And if we look at the results, we weren't much off it. There you go. So we hit that level, the monthly, and we pretty much nailed it. Look at that. Everything is aligned with these lines. You see these levels of significance, daily, point of control, and so on. It works, guys. Anyway, that was one Solana topping off structure that we called right. And we're still updating on the channel on how it's progressing. Here's the one I want to do, render. Some time back, I was talking about the parabolic structure and the plan. And we've been calling it out like that. Bitcoin is doing something similar, but less aggressive. And we're making render our project about our theory on parabolic stuff. Long story short, if I play this forward, you see we hit our target and then price dropped 50-60%. So if we look at it closely, right? So we had initial parabolic stuff, then this just went crazy vertical, right? And we're using Fibonacci to get our targets, and the golden ratio 1.618 was the target. My point is, using this modeling, we can get it right. So when going back to Bitcoin, we're applying the same theory, but it's difficult to get anything right until you see the results. But the golden ratio is probably the good one, the wave 3. Wave 4 comes down, and wave 5, we don't know how much it's going to be extra. But I like this theory, and it's taking place. So that's it, guys. I'm not going to add more to it. Some of it's all theory. What I've done is I've covered the approach, and the real approach is about the moving averages as confirmation. I think that's a strong tool for the ones that want to play it safe, and we're giving you plenty of examples why. So here we go. All right. So we look at that finding resistance. So we'll just see how it goes. But please give me a like and share, and I'll talk to you soon. Cheers.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.